Hello and welcome. In the previous video, we learnt a few rules that we need to follow while marking the supply and demand zones. Correct? In this video, we will learn few more rules that we need to use and check along with the rules that we had learnt in the previous video while marking the zones. Alright, now let me take this setup. We have a drop based rally setup. This is a reversal setup and you know it, right? As soon as we see a drop based rally setup, should we go ahead and mark the demand zone here? No, right? Because what do we want? We want two rally candles here. This is leg in and this is leg out. According to the rules that we have learned, we want minimum of two leg outs. So here we have only one leg out and so we cannot mark the zone here. So what should we do? We have to wait for the next candle. The next candle here is a base candle. So we cannot mark the zone yet. What should we do? We have to wait for one more candle. So the next candle is a rally candle and the candle after that is a rally candle again. So we have 1, 2, 3 leg outs. If we consider this drop based rally setup, we have 1, 2, 3 leg outs. So now this is satisfying all the conditions that we had learned in the previous video, right? So now can we go ahead and mark the demand zone here? No, not quite yet, because we have some more rules that needs to be satisfied before we can consider this for zone marking. And let us see what those rules are. Here we have a swing. We have a swing. If you are a trader and if you are in the market for some time, you know what a swing is, correct? If you do not know, then a swing is where the price turns. So if you see here, the price was moving up and this is where the price turned and started moving down. So this is the turning point. So the turning point is called as a swing. Alright, so we have a swing here. Now what we want is two leg outs before the swing. We want two leg outs before the swing. And what we want is the swing to be broken. The swing to be broken. So here we have 1, 2. Two leg outs, but they are not before the swing. So here we have one more rule that the second leg out, if it breaks the swing, can be considered as a valid setup. Meaning what we actually want is two leg outs before the swing. Meaning the two candles must be below this line, If that is not available, then at least the second candle should break the swing. And that is what has happened here. The second candle has broken the swing. Correct? So first leg out, second leg out. So second candle, second leg out has broken the swing. And so this can be considered valid. Alright. Now, is this all? No. There is one more condition. What is that? The swing must have minimum two leg outs. Okay? So if you consider this setup, we have a leg in, base, a leg out, and a leg out. Correct? Rally, base, drop, and drop. So we have two leg outs in this swing, which is what we need. We need minimum of two. So minimum of 2 must be there here along with minimum of 2 here. The swing should be broken by the second candle, or we must have more than 2 leg out candles below the swing. Okay? Now, why do we want the swing to be broken? See, this is a swing and it has two leg outs, correct? It is better if it has three leg outs, but we need minimum two leg outs. When we have multiple leg outs, it means that this is a possible supply zone. Now, here, when the price is moving up, we do not want the price to react at this level and come back. If the price reacts and comes back, then it means that this level has acted as a supply zone. Correct? Now, if the leg outs here break this swing, it means that the buyers here are stronger than the sellers who are here and who pushed the price down. Okay? So when the price breaks the swing, we know that this swing is not a valid supply zone. Or in other words, these buyers have consumed all these sellers and have moved up. Okay? Yes. So these are the rules. So if all these conditions are satisfied, then we can mark this as a demand zone. Alright? I'll explain this once again by taking a chart later, but for now, let me continue with the video. Here we have a setup. We have a rally base drop setup, and this is where the price has turned and started coming down. There are two leg outs here, and so we can consider this as a swing. We'll consider it as a swing only if it has two leg outs, correct? Minimum. Right. Now we have a drop base rally setup here. As soon as we get a drop base rally setup, we will not be marking the zones. What we want is minimum of two leg outs. So we will wait for the next candle. So the next candle here is a base candle. We will wait for one more candle. So one more candle here is a base candle. We will wait for one more candle. We have one more base candle. We will wait for one more candle. And now we have a rally candle. So this setup now has two leg outs. This is leg in, this is leg out 1, this is leg out 2. But the problem here is we do not have two leg outs before the swing. What we actually want is two leg outs before the swing, or at least the second leg out must break the swing, which has not happened here. The second leg out has come after the swing, and so our conditions are not satisfied here, and we will not be marking this as demand zone. Alright? Now, it doesn't matter what happens when the price comes down to the level. It may come here and it may go up, but we are not worried about it. We have certain rules which we follow and stick to. Alright? Now, I hope you have understood this. Let me proceed to next case. We have this. The current market price is here now. We have rally base drop. For us to consider this as swing, we have two leg outs. This is valid swing and this is the level. What we want next is a leg out, and after that one more leg out. Alright? But sometimes what happens is we get a very big candle like this. Now this candle itself breaks the swing. If that happens, we consider this as a valid setup, because this big candle is equivalent of two leg out candles. Look at the size of this candle. It is very huge, correct? This single candle is equal to two small leg out candles, or two normal leg out candles. Alright, so if we have one big candle breaking this, then we consider this for marking the zone, and we mark the zone like this and trade it when the price comes down. Alright, so I hope you have understood. Now let me proceed and show you a chart and explain you whatever I have taught till now. Alright. Alright. I am in my Zerodha dashboard and I have opened up the chart of ITC of daily time frame. Okay, so this is daily time frame. Now the current market price is here. Let me zoom here. Alright, so let me zoom here. We can see that the price has turned here and it has come down. But can we consider this as a swing? Let us see how many leg out candles this has. This is leg in candle, a rally candle, a base candle. This is rally candle, once again a leg in candle. And here we have a drop candle. I told you that sometimes we do not get base candles, correct? So we have a rally and a drop, and then a drop, and then base. This is not drop, this is just a red candle because the price has not come down. It has opened up and it has come down, but it is in this level itself, level of these two. Okay, we have we have base here, drop, drop, base and drop. So we have multiple leg out candles here, and so we can consider this as a swing. So let me mark this as a swing. Alright, now we have a drop candle and a rally candle. Once again, we do not have any bases here. I told you that is perfectly fine. Drop rally, base, 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 rally, drop or a base. We do not consider this anything because the price is in the range. This is base, base, rally, 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 base, rally and so on. Okay, but here in this setup we have drop and a rally, first leg out, and then we have our second leg out and our third leg out and our fourth leg out. Below this swing we have three leg outs. Okay, 1, 2 and 3. If you want to consider this as a base candle, it is fine. We'll consider this and this as leg outs. One leg out, two leg out. We have two leg outs below the swing itself. So this is valid now. The third leg out has broken the swing, and then the price has moved up. That also needs to happen. The swing should also be broken. Okay, it is not only that we need two leg out candles below the swing must also be broken. So now the swing has broken and the price has moved up. And so we can consider this for marking the zone. So this becomes our demand zone. Alright. So if price ever comes back to this range, then we can expect the price to move up. Alright. Now there are few more rules which I have not explained, which we will learn later. Okay. But according to whatever we have learned till now, this is fine. Alright. Now this is day chart. Let me delete this. Let me delete and go to 5-minute time frame in the same chart. Okay, same chart. Now let me come here. See, we have a drop, base, drop. Correct? The price has come up and it has turned here. Can we consider this as a swing? Can we mark this as a swing? Let us check. For us to consider it as a swing, it must have minimum two leg outs. So it has one here and one more here. So two leg outs are there. So we can consider this as a swing. So we'll consider this as a swing. Alright. Now coming to this, we have a drop candle and a drop candle, but not a good drop candle. So we'll consider it as a base candle. So drop, base, rally. Alright. We have a drop, base, rally setup. And now what we want is minimum two leg out candles below this swing level. So we have drop, base, rally, rally, drop, rally, and so on. Okay, but the main thing is we have two rallies or two leg outs below the swing. So that condition also satisfies. But this level is not broken. We do not see any candle breaking this level and moving up. And so this zone here cannot be considered as a valid demand zone. So you can see price has moved up and it has broken this and it has come down. Alright. So we had two leg outs for us to consider swing, and then we had two leg outs for us to consider this as a valid setup, but then this swing was not broken and so we cannot mark the zone here. Alright. Now let me move up. Let me delete this to avoid confusion. Yes. So we have a rally, base, every base is here, everything is base here. Then drop, base, drop. So rally, base, drop setup. Now can we consider this as a swing? Let us see. This is rally. These are all bases. We have a drop, base, drop. So we have one and two leg outs. Since we have two leg outs here, we can consider this as a valid swing. So let me mark the swing here. Okay, let me mark the swing here. Of course, the price has gone till here, but let me take till here. So this is a swing because it has two leg outs. Now coming to this setup, let me zoom in. Now coming to this. So here we have drop and rally. We do not have a base in between, which is fine. Drop, rally, base, rally, drop, base, rally, and so on. What we need is two rally candles or two leg outs below this level. So we have one leg out, second leg out. We can consider this as a base or a rally, and we have a rally here, but we have two legouts below the level, so this is valid. And what we need is this level to be broken, so this level is also broken by this, and so we can consider this as a valid demand zone. So if the price ever comes back here, we can expect it to move up. As it come back, yeah, it has come back, but then it has went slightly down and it has moved up. Now you should expect these things in the real market. Okay, so it has acted as a valid demand zone, but then the price has moved little bit down and it has continued to move up. All right, and right now it is taking support here also. So this is how we mark the zones. And of course, as I told you, there are few more rules that we need to learn before we can mark the actual zones. So I hope the concept is clear. I want you to go ahead and practice the things that we have learned till now in real charts. Okay?